So, as I've explained on this channel before in recent days, if there is a week for a little bit of caution, maybe a little bit of hedging, it could perhaps be this upcoming week. Now, I know a lot of people don't like to hear that, but that's the fact of the matter. I wrote a post on X I will share with you, breaking down my thought process. All of these different things that I'm watching, I wouldn't say concerned with necessarily, perhaps that's could be the word you'd use, but things that I'm watching, looking out for. Now, we will talk about Tesla here in this video in just a moment, but I want to start with the post on X. And if you have not followed me on X already, go ahead and follow this account on X. I share a lot of great things that I think you would benefit from, but I wrote here, I want to be very clear. I have grown more optimistic on the prospects of a soft landing. Am I sold on it? No. We won't know for many more months, but I am positioned for it. I have not sold a single long-term stock because you never should unless the business itself gets worse. And I've actually bought more Tesla recently. I bought Whirlpool. I bought Applied Digital right before Tesla earnings. I bought more right before Whirlpool earnings. I bought more, and I just recently bought Applied Digital. Now, I say number one, the last full week of trading before the election. If we are going to price in election risk at all for equities, it will start this week. Will that get priced in? Not sure, but a good chance it does. So on a spectrum of super likely, not so likely, I think this is the point in which you start to get to the more likely side of actually pricing an election risk. Number two, big tech earnings. Sure. Earnings expectations have fallen a bit, but not much for big tech. More importantly, from a reasonable perspective, these stocks have more to lose from a bad report than to gain from a good report. These stocks are trading at multiples most analysts would have cried about 5 years ago, especially Apple, which is a no-growth stock for many years. Number three, Apple Intelligence launches on Monday. Will this service be a wild success? Eventually, but likely not for a couple of years. What do you think Wall Street will do when Apple Intelligence doesn't meet expectations? Really, the second AI product ever that is expected to merge AI into the mainstream population. It could throw into question the massive capex budgets big tech is setting aside for AI investment. Wall Street is not prepared for AI capex to take 3 to 5 years to post meaningful gains. But again, is that a guarantee? Obviously not. But is it super far-fetched? Absolutely not. Meaning it's not a guarantee that Apple Intelligence is a flop. It's not a guarantee that the markets will not look at that as favorable. But given expectations and the reality, it's not super far-fetched to say there could be some concerns about AI adoption on Wall Street if you do see Apple Intelligence not be a super big success right from the start. Now, number four, economic data dump this week. I'm actually more optimistic on these sets of catalysts. God forbid we miss on econ data right before an election, but nonetheless, it's still possible we do miss. Number five, conclusion. If you have the means, get more cash ready. You want to buy the correction dip. Is this the time to sell everything? No, I don't believe in that. You want to position yourself to benefit in any outcome. Like the old saying, quote, prepare for the worst, hope for the best. I think that makes the most sense in the short term. Call me crazy, but corrections do happen from time to time. And that was just the easiest way I could break down all of my thoughts to be concise and straight to the point. I know I can talk a lot. I know I can, skip certain points here and there. I'm working on getting better at that. But that's the way I'm looking at markets for this upcoming week. Now, we'll break down each of these different events here in just a moment, but that's the summary of the issue for this week. Now, for Tesla stock specifically, one of two things could happen. If markets do sell off, Tesla stock could sell off. The typical correlation causation. If markets do sell off, Tesla stock perhaps could rally. I want to point out the last 2 hours of the trading day, hour or so of the trading day on Friday. The S&P was in a downtrend. It fell into the end of the trading day. Tesla actually rallied into the end of the trading day. Like almost exactly when the market started to sell off was the moment in which Tesla started to rally. I take note of these very short-term differentials because they can lead to longer term differentials, multi-day differentials. And if this continues this week, Tesla could actually rally as the markets fall, as investors look towards a stock that has good news, that is down a lot, that is preferably a big tech name with AI benefits, that is in an upwards trajectory, that is doing well. It's kind of like a hedge, right? Instead of going short markets, which is generally riskier than going long markets, you could just buy a stock that's doing well, and everyone comes to that same kind of conclusion, and that stock can do well, even as the markets fall. It's kind of like a weird hedge. And I think that's the biggest thing we want to look out for Tesla this week. There's obviously enough fuel on the, sidelines. There's enough positive news and catalysts to send Tesla stock higher. But does Tesla fall alongside the broader markets, or does Tesla rally from here? Now, as I said in the last video, Tesla on Thursday had its best day since 2013. This was actually the second best day in the history of Tesla stock. The first best day was a 24% gain back in 2013. What happened after 2013 is Tesla stock went up 141% over the next 3 months. So historically speaking, when you get big days like this, it tends to continue and it tends to last a while. So let's start again with the 3 E's for this week. In case you are unfamiliar, we have election risk, which the election is one of those things, again, I don't know will be priced into markets. It is certainly possible that it does get priced into a markets, but it's certainly possible that it does not as well, and markets just don't care about the election. We'll see. This is the last full trading week before the election, so if there is risk that will get priced in, it'll start this week. And I actually think that is part of why markets sold off and had such a weak Friday, even selling off 0.2% in after hours trading. Because I also think the markets are pretty fearful of a potential contested election or delayed election results. And if we're all starting to expect that, that could get priced into markets ahead of time. And that's some of the issue I see with this week. Now, Apple Intelligence launches Monday. As I have said before, this is one of those situations where, yes, Apple Intelligence will be a wild success. Apple will be wildly successful in AI, and I'm very bullish on AI long term, but I think this is a 5-10 year game here. This is not a 1 to 2 quarter situation, whereas Wall Street is expecting results from this AI investment that these big tech companies are doing within the next 12 months. And you're not going to see that. The best you'll get is a productivity boost at these companies, in which you've already really started to see that. I don't know how many people listened to Google's earnings call last earnings season, but Google's CEO basically said that, hey, we are seeing productivity enhances now, but we do not know how long it'll be until we will start to actually bring in revenue, bring in accretive profitability to Google from the AI investment that we're doing today. And analysts kept asking the questions over and over again, when will these AI investments pay off? And that's the issue here. Now, specifically with Apple Intelligence, if there's any company that can be an early success in AI, it's probably Apple Intelligence. Here's the deal though. People are stretched. They're not going out and they're not buying the new iPhone. It's pretty much the same as the 15, just for Apple Intelligence. And Apple Intelligence is going to launch in waves. So the first wave is on Monday. You've actually had an early release on some products, and the initial reactions are at least not that great. Let me know if you've used Apple Intelligence down below in the comment section, if you like it or not. And the problem with Apple Intelligence is it is really the second product that is expected to create widespread adoption of AI and merge that into the, public. And if that's not a wild success, at least at first or initially, there's going to be a lot of doubts about how long AI investments are going to play out, in which a lot of the valuation you've seen to big tech in the last 12, 18 months has been based on AI expectations of future results. You might think Wall Street thinks in terms of the longer term outlook for companies, but Wall Street thinks in terms of 3 months to 12 months. sometimes like 18 months, but they don't think out 3 to 5 years. Now, the earnings situation is also pretty straightforward. Tomorrow morning, you have onsemi, Philips, Arcadia. Tomorrow in after hours, you have Ford, Cadence, Waste Management, F5. Tuesday pre-market, SoFi, PayPal, BP, McDonald's, Pfizer, Royal Caribbean, JetBlue, Crocs, and a couple of others. Tuesday in after hours, you have AMD. I think AMD will be important. It can affect NVIDIA. Just depends how the result is, and there typically is a sympathy move with NVIDIA. You have Google, Snapchat, Chipotle, Visa, First Solar, Reddit, Chubbs. Wednesday pre-market, Eli Lilly, Caterpillar, Humana, Biogen, ADP, and Genco Solar. Wednesday and after hours, you have Microsoft, Meta, Coinbase, Robinhood, Sonova, Etsy, Riot, Roku, Carvana, and Starbucks. Thursday pre-market, Uber, Peloton, Merck, ConocoPhillips, SiriusXM, Altria, MasterCard, Estee Lauder, Kellanova, and Norwegian Cruise Line. Thursday and after hours, Amazon, Apple, Intel, Atlassian, and Friday pre-market, you have Fubo, Chevron, ExxonMobil, and Wayfair. And yes, again, I will admit, for the vast majority of the S&P, earnings estimates have come down a lot. But for big tech, they have not, especially in regards to AI. That's, I think, a big part of big tech earnings. Like the businesses, okay, that's one thing. But what do these companies say about AI? What are the AI results? Are they good? Are they bad? If they're bad, we have a problem. If they're okay, we have a problem. If they're not great, in other words, we have a problem. You can kind of judge big tech sentiment around AI when you look at NVIDIA, because NVIDIA is deriving most of their revenue from these 7 largest companies in the S&P. If these 7 largest companies in the S&P do not confirm that we're seeing real results from AI, that's the bigger issue. It's not EPS, necessarily forward guidance. In regards to the 7 biggest names, it all has to do with AI. And I think Apple Intelligence is a big story coming Monday. Now, I don't know how successful or how bad or what kind of headlines we're going to get from Apple Intelligence coming on Monday. We will definitely get more by Thursday when Apple does report earnings. And all I'm really saying here is there is more to lose on a bad report than to gain from a good report. Because again, these stocks, these 6, 7 largest companies are trading near all-time highs, if not at all-time highs. Now, as far as economic data, I'll give you the rundown for this week. I do think economic data is more of an upside surprise than a negative surprise, just because we are right before the election, and there's a very low odds that the data comes in bad this week. I mean, I'm not going to elaborate on that too much, but right before the election, the data's not going to come in bad. I've actually talked about this ever since August, that I wasn't concerned about the economic data until after the election. And I still hold that same stance, and that has worked out pretty well. So for Monday, tomorrow morning, Dallas Fed Manufacturing Index, expecting that at -1. Last month was -9. So expecting a better number there. You have 2-year, 3-month, 6-month, and 5-year bond auctions. Tuesday, S&P Case-Shiller home price month over month and year over year. Wholesale inventories, retail inventories, excluding autos, the red book year over year. But the big data is JOLTS job openings. You're expecting that will fall from 8.04 million down to 7.92 million. If you get a large drop there, that's not going to be good, although I'm not expecting bad data. It is possible, though. Keep in mind, it is possible, but I think it's highly unlikely. CB consumer confidence, that's also going to be important. We get a lot of smaller, different components within that report. So that's definitely something to watch for. JOLTS job quits, Dallas Fed Services Index, expecting that to be roughly where it was last month, and a 7-year bond auction. 7-year bond auctions are less dependent on where the federal funds rate is and a little bit more weighted towards inflation expectations and fiscal policy paths. So I think that could, move the bonds a little bit more for the long end of the curve, and something to watch for. Wednesday, we get the ADP employment change, expecting 110,000 job ads. If if that's the number we get, I think that'll be just fine. Also going to get GDP growth rate, quarter-over-quarter advanced data for Q3. We're expecting 3.3% GDP. That is where the Atlanta Fed GDP Now tracker is tracking. I'm sure we're going to come in probably right around there, if not maybe a little bit higher. So I really think if the bulls are expecting a good week this week, it's really going to come from the economic data, in my personal opinion. That's the bright spot, I think. Pending home sales month over month is expecting to come in at positive 1%, better than last month, 0.6%. And year over year home sales are expected at negative 1.2%. Last month, year over year, was negative 3%. So that would be an improvement as well. On Thursday, we are going to get core PCE month over month, expecting 0.2%. Last month was 0.1%. Personal income, expecting that to rise 0.4%. Last month was 0.2%. So a rise there. And personal spending month over month is expected to be 0.4%. Last month was 0.2%. So expecting some pretty good numbers there. Initial jobless claims expected to rise to 231,000. As long as there's not a big increase, you're going to be just fine from that regard. Now on Friday, our big data comes out for this week with non-farm payrolls expecting 140,000. We also want to see what last month's revision takes the number to, because last month's number was 254,000. So does that get revised down? Does that roughly stay the same? That's the big question. 140,000 would definitely be a sharp down move, but really last month's non-farm payrolls was a seasonal adjustment that pushed it to 254,000 because of the 750 or so thousand government jobs that were created. Now the unemployment rate is expected to tick up from 4.1% to 4.2%. So you are expecting a little bit of a rise in the unemployment rate. If that moves up more than expected, that's a problem. Again, I don't think it will though. ISM manufacturing PMIs will also come out. For the employment component, you're expecting things will get marginally better. Construction spending month over month is expected to get better as well and come in a 0.5% positive. Last month was negative 0.1%. New orders expected to increase from 46.1 to 47, and manufacturing prices expected to fall from 48.3 to 48.2. So I do think Friday's ISM manufacturing is going to be less important compared to the jobs report. I think that's what really markets are going to focus on. So we'll see. As far as market internals, they have been deteriorating a little bit over the past week or two. The percent of stocks currently trading above their 50-day moving average fell 3.15% on Friday. So 3.15% of all stocks broke below their 50-day moving average on Friday. You have went from a recent high of 73% of stocks above their 50-day moving average to 51% now. So there's definitely been a deterioration under the surface. Are we in a bad place? No. Are we in a great place? No. Once you're at 51% of stocks trading above their 50-day moving average, things can go either way from here. The most recent AI investor sentiment survey showed a sharp down move in bullish investors from 45.5% to 37.7%. Neutral investors rose from 29.2% to 32.4%. And bearish investors went from 25.4% to 29.9%. It was also reported over this weekend that Israel did do their strike on Iran. So a big question that we will have heading into tomorrow is, what effect does that have on oil? Does oil rise or does it not? Israel did not strike any oil or nuclear facilities, mostly drone making facilities and ballistic missile facilities. There was reports that 2 Iran soldiers were killed via this attack. So could be more escalatory tensions in the region, but it could be one of those situations where we were all waiting for an event. There was some fear about that event and what it could cause, and it's here, and it wasn't as bad as thought. So maybe markets can actually move higher now that the fear catalyst is over. Although I don't really think the markets have been responding or reacting to that Middle East fear at this point, it is possible that markets do take the attack on Iran as a positive. Believe that or not, we've seen that many times before. So oil's a big question for this week. Bond yields with the 10-year Treasury, also another open-ended question. 10-year Treasury yields at 4.24%. Do bond yields continue higher? I think that could be an issue if that happens. If we get good economic data this week, bond yields will move higher, and that will pressure stocks, but at the same time, it creates more certainty about a soft landing. On the flip side of that, if we get bad economic data, 10-year Treasury yields fall, potentially could support markets a little bit more, but is, I guess, bad for the soft landing prospect. And I will just also note that the markets gapped up on Friday, rallied throughout pre-market, rallied for the first hour or so of the trading day, and then sharply flipped and sold off into the end of the day, largely with no new information. And typically when you get these reversals, they tend to last, and you tend to see, the next week be not so great of a week. So let me know what you think about all of this information down below in the comment section. Are you bullish? Are you bearish? Do you see the risks out there? Do you not? Go to the community page of this channel and vote. Let me know what you think about my thought process. I would love your opinions down below in the comment section. And I am trying to respond to each and every single comment posted on these videos, especially if it's something constructive that challenges my thought process. If you just call me, a retard or something like a lot of you guys have in the comment section, I may not respond to that. I might, but maybe not. But if you really put some thought into having an active conversation, then I will definitely respond to that comment. So look forward to that. Look forward to chatting with you guys down below in the comment section. Nonetheless, you guys have a safe weekend. Go Lions, and I will see you in the next one.